Get the latest Zacks research, analysis, and rankings on exchange-traded funds in Exploring ETFs. We're going to take a look now at what is termed the best and worst of ETFs for Q4. And here to help us with that is Eric Dutram, our ETF strategist at Zacks.com. Well, you have compiled quite a list here, young man. So apparently the latest ranks are out for sector ETFs?
That's right. We just updated all the sector ranks for U.S. ETFs, and some interesting trends have started to develop here.
Okay, let us know.
Well, actually, technology has been a really strong sector from this front. We're seeing strong earnings estimate revisions in a lot of tech names, and this is actually a pretty high-growth sector. And investors are still going for these high-growth names. And they look to, considering the whole Fed is going to stay on the sidelines for a little bit, so this could be an interesting sector to stay in. Meanwhile, on the other side, REITs, utilities, these are kind of been a little weak, and we're actually seeing energy too. Oil prices have slumped a little, so this might be a sector to avoid here in Q4. And investors can actually get all the list of all the top-ranked funds by going to our website and Zacks funds/top ETFs.
Okay, so then what is the first ETF on the slippery slope of the chart?
Well, first we're going to look at the energy ETF, IYE. This is an iShares fund, and it focuses on large cap stocks. You got your Exxon Mobils, Chevrons in here. And as I was saying, oil prices have been kind of sliding here. So this might be a sector you might want to avoid, especially in the refining space. This actually is a very unfavorable Zacks industry rank, bottom 20% or so right now as of October 31st. Mm-hmm. And this fund actually has a Zacks ETF rank of 4. It was a 3 earlier in the year, and now it's kind of slid down, so it might be one to avoid for investors.
Okay, and because we're recording this on Halloween morning, you're calling these the tricks and treats.
Exactly.
In the ETF space. All right, so one more trick is what, a mortgage REIT?
That's right. REM is the symbol here. This focuses on mortgage REITs. They buy, they take debt at low rates, and then they kind of invest it at hopefully the higher rates further down the line. Mm-hmm. We saw a very weak earnings report from AGNC, which is one of the top holdings. This was actually just earlier in the week, so the space has been pretty beaten down the last couple of days. And actually the Federal Reserve is looking into this sector from kind of a too big to fail perspective, because a lot of these actually have more than $100 billion in assets. So there's some concerns, hey, if there's an issue in one of these companies, is it going to pose a systemic risk? So it's been pretty beaten down over the last couple of months, more than a 20% loss in the past 6 months. So this ETF has a Zacks ETF rank of 4, also a sell. So this might also be one to avoid for the investors out there in the fourth quarter.
All right, on the treat side, there's something popping in the clean energy space.
That's right. Solar's been very strong the last couple months. We're seeing some strength in international markets too. China seems to be rebounding. Europe's very strong, and these are pretty key markets for the solar space. We've also seen strength in some of the other names in the sector, such as your Teslas and other names like that. Thanks to this trend and kind of the booming earnings in a lot of these names in this space, this ETF has surged up the charts. It's actually a rank 1 ETF, a strong buy. So we look for this one to kind of outperform in the fourth quarter.
All right. Also in focus is the social media space.
That's right. We've seen some strong earnings lately. I know Facebook just reported last night. It was they had strong growth. Some people are a little concerned about their future, but we're not taking as concerned of an approach thanks to their strong growth in their mobile. So this could be a very interesting play for investors who want broad exposure to the space and don't want to see the volatility that might be in one or two of the names.
We have a Twitter IPO coming up here not far from this record date.
That's true, and it will probably be in this fund, I think, a couple days after the launch, so it'll probably work its way in maybe the top 10 holdings, depending on, obviously, how the stock does in its first couple days in the market. Mm-hmm. It's important to note this ETF also has a big international holding, a lot of Chinese companies in here, so you're going to get pretty diversified exposure. Once again, this has surged up, from a sell rating up to a buy. So once again, could be a top pick. Nice treat for investors going into the fourth quarter.
All right. Do you own, I have to ask, do you own any of these?
I do not.
All right. Check out other ETF articles and ETF education. Where? Well, in the ETF section of Zacks.com, of course. So if you're not already there watching this video, get on over to the homepage. You can link to the ETF section right off of the homepage at Zacks.com. With Eric, I'm Terry Ruffalo.